Qualcomm's various business segments are growing significantly as the company's new product launches are hitting markets successfully. In this video, I'll talk about how those launches are resulting in increases in revenue and profit for Qualcomm stock investors.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
Starting with the Internet of Things segment for Qualcomm, revenue in that segment increased by a whopping 36% year over year to 1.5 billion. And of course, this was driven by new product launches with their on-device AI capabilities across these consumer electronics that are now in more demand. In the automotive segment, revenue jumped by 61% to 961 million. And these are significant because Qualcomm is not known for being a fast-growing company. The majority of this company's revenue comes from smartphones, handsets, and this segment is not growing rapidly. And so Qualcomm's gains in its various segments are coming as a result of increases in market share primarily. And the increases in revenue are leading to increases in profitability. The earnings before tax margins of 32% in the latest quarter exceeded even the high end of management's guidance. Qualcomm is a type of company that benefits from economies in scale, meaning the more it produces, the more it sells, the more profits it generates, the higher the profit margins. Not every company is like that. Some companies, their unit economics are so discombobulated that even with increases in sales, their profit margins don't increase and their profits actually go in the opposite direction. Unfortunately, many investors fall prey to these kinds of companies and invest in these type of companies because they're hyped up or because of momentum or because of one various thing or another. But when looking under the hood and checking out the unit economics of the business, you realize the business prospects are not that strong. And in fact, their long-term viability are under question because they can't make a profit at existing scale. And the more they sell, the more money they lose. And so it really raises question marks why investors think otherwise. So Qualcomm is the opposite of that. Qualcomm generates healthy profit margins, and as their sales increase, their profit margins expand, which is what you like to see in a business. And the mechanisms for that is that you have one corporate management team, right? And so when you generate increasing sales, that corporate management team, the cost of that corporate management team decreases as a percentage of overall revenue because it's not like you're hiring a new CFO or a new CEO when your sales increase. That's one mechanism. Another is, let's say, your cost per unit. You generate a lower cost per unit when you produce more units. And businesses cannot produce more units unless they feel confident they can sell those units. They're not going to produce just to hold them in inventory. That would defeat the purpose. Qualcomm benefits from those, and they've demonstrated solid increases in profitability. So for the second quarter, they're forecasting non-GAAP revenues of around 10.5 billion and earnings per share of $2.80. Now, what surprised me is that in the handset segment, the smartphone segment, they're forecasting revenues to grow by approximately 10% year over year, which includes the benefits of increased shipments of the Samsung Galaxy S25 smartphones, which is powered by Qualcomm components. And the reason I say I'm surprised by that because the handset industry itself is not growing. It's a stagnant industry. It's a mature industry, not very many new customers coming in. And so for Qualcomm to generate 10% growth in this industry highlights the power of its technology, of the technology that it sells into some of these flagship devices like the Samsung Galaxy, and how these devices are gaining market share overall. That's one thing. Another thing is within the handset industry, People are trading up their devices now looking for more capable smartphones. And the more capable a smartphone, the higher the average selling price, the higher the component value inside the smartphone, more memory, more computing power, more storage, etc. And so that's within the segment, and Qualcomm's benefiting from that nicely. Furthermore, they expect the Internet of Things and automotive revenues to grow by approximately 15% and 50% respectively versus the year ago period, driven by strong product momentum. So, across their key categories, they're expecting 10% growth in the most important category for Qualcomm, which is handsets. And then the Internet of Things segment growing by 15% year over year is solid. And the automotive segment continues for Qualcomm to generate excellent returns, growing very nicely, very quickly, and growing to become a more important part of the business overall. And the automotive segment is another segment like the smartphone segment where it's not like people are buying more cars. Unit sales of cars are not increasing by all that much. But what is happening is the average selling prices of cars are going up as cars are getting infused with more technology. People want cars with more technology, bigger screens, bigger driver displays, better capabilities, and of course, with the increase of driverless car technology. Now, I say that without just meaning that there will be no driver inside the car. What I mean by driverless car technology is the whole thing, where some of it could be assistance in helping you park, where the car will parallel park, assistance with some safety features, where if there's a car too close to you and you haven't noticed, it'll beep and show you a signal saying, hey, you're about to try to change lanes, but there's a car coming, and it'll alert you. And so these safety features, these enhancements that are driven by increased technology are highly regarded and higher in demand by consumers. And of course, the ultimate, which is a full self-driving car, is under development. Some companies already have driverless cars on the roads, and many businesses are investing in this driverless car technology. And with each incremental step, they need more computing power, more capability. Qualcomm benefiting from all those trends within the automotive industry. So if you're bullish on the trends for automotive technology, for driverless car technology, in my opinion, one of the better investments could be Qualcomm, right? Because the valuation is so cheap compared to the prospects. They've already developed this technology, they're already benefiting significant growth. It's a great way to benefit from the growth of that driverless car technology. I would suggest investors look away from Tesla because that stock is so overvalued, so overhyped compared to a stock like Qualcomm, which doesn't have all of that incorporated into its valuation. So you could benefit from those long-term prospects without paying these nosebleed valuations for a company that's so hyped up like Tesla. So that's the way I'm thinking about this, and that's one of the reasons why I'm bullish on Qualcomm stock. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.